to Geared for Growth. I'm your host, Mike Mortlock from MCG Quantity Surveyors. Today, we're talking to a previous guest, Oliver Jackson from Living Property. Now, we've previously talked to him about renovations as a strategy, and I put it to him, is that something that's still achievable today given a shortage of trade labour and a huge increase in construction costs? We also talked to him about a huge increase in the number of self-managed super fund investors that he's working with, and he gives us some insights into price points, areas around the country, and all sorts of things that he's up to helping his investors achieve their desired goals. An awesome interview with Oliver that hopefully you'll get something out of. Here's Oliver. Oliver Jackson, thanks for joining me back on Geared for Growth.
Mate, it is always a pleasure. Thanks for having me back.
I don't know how long it's been or what we even spoke about, but the world has changed. Even if we cover the same material, I'm almost certain that we talked about renovating, and that's something I want to kick off the conversation with you about renovating. There's certain things that become in vogue depending on the cycle, like people talking about finding positively geared properties or flipping things or talking about renovating. Renovating seems to have kind of died off as something that we talk about as a strategy because there's a labour shortage, construction costs are elevated, but you're still doing it. Are you just paying through the nose, or have you found a way to keep it economical?
I don't think the renovation strategy has changed the last 100 years, has it?
Well, not as a strategy, but sometimes it's easier because construction costs aren't 30% higher than they were pre-COVID, or you don't have 3,500 building companies go into liquidation in a financial year.
Yeah, I wouldn't be doing developments at the moment personally. Like doing a full build development's probably a bit of an issue. As for trades at the moment, let's just talk about my house, right? I'm renovating my house at the moment. I live in the Byron region. Usually a nightmare to get trades. I've got trades calling me, asking me for work because they're quiet. So there's trades everywhere. So you're actually getting pretty good deals. You can get a trade when you want them. As for costs of everything have gone up. Like, what are you going to not renovate your house because the cost has gone up?
Well, I mean, but it's outpaced inflation, I guess, in real terms. So if you're engaging, say, a building company to do a reno, I wonder if you're getting much more resistance on a price point than actually you're kind of project managing it yourself and calling in trades at the appropriate time. Is that fair to say?
Yeah, definitely. Yeah. And we're only doing cosmetic renovations. We're not doing crazy stuff.
Yeah.
We'll do a gut and a rebuild, but that's, you don't need a builder, you don't need engineers. We're not doing anything load bearing. So as far as the builder side of things, I mean, they're all going broke. It seems to be like there's one going broke every day. So I wouldn't like to be a builder or halfway through doing a build. But on the renovation side of things, mate, the price of property just keeps going up. Like you're going to put, you still put your 20 grand in, you're going to get your 40 grand back. Doesn't matter what the cost is.
But not all renovations are created equal, right? There's certain things that you can do where you might get 2 or 3 times your investment, and others it's kind of like, you might not get anything at all. For example, I can remember spending 10 grand on drainage, and at the end of that, I couldn't actually see it. I'm like, for $10,000, I want to be able to see it, ideally drive it or fly it or drink it, something, right?
Yeah, well, to be honest, what we're kind of doing now more so is because obviously it's harder to get cash. Savings of people dropped a fair bit because everything costs more money. So we're actually doing renos in multiple stages. So let's say we buy the ugly duckling that's, purple and carpet's rooted and needs a paint. The first stage, once we get rid of the tenant, is we're doing, say, just paint, floors and lights.
Yep.
Getting it rented out because you can still put the rent up because the place looks fresh. And then down the track, 1, 2, 3, 4, 5 years, that's when we'll do the kitchen and bathroom. So we're kind of breaking them into 2 parts.
And would you normally sort of coincide that with, say, a tenant moving, or would you actually say, look, no, this is the time, so we actually have to not renew the lease? Like, how would you normally treat that?
Well, most of the properties we buy, the rents are so bad. Like, someone's lived there for 10 years, they might be paying $250 a week rent because the people, they're a good tenant and they don't want to put the rent up when it should be $600 a week. So we either end the tenancy or wait till it runs out. But yeah, start fresh, everything fresh.
You described a little bit about the types of properties you're looking for, purple walls, and I think you said the carpet has to be rooted, which I'm guessing is a technical term. But ideally, what do you look for as a specialist investor? What are you sort of looking to see? Yes, this actually is something that I can turn around real quick and get a great return on.
Well, at the moment, very hard to find property. There's not much stock on the market. There's still a lot of people buying. And I don't really watch the news, but I don't know if the media is saying the property market's gone to shit or what's happening. But
they have. Yes, they've been saying it for, I don't know, roughly about 90 years. They've been saying it's unaffordable, but certainly in the last couple of years. And the metrics support that, right? The multiples of salary to service a property. I mean, Alan Kohler did a piece for the ABC the other day and basically said it's out of reach of the average wage earner. Now, I would kind of dispute that because the metrics, and he mentioned it himself, they're always on a 20% deposit. I mean, how many clients do you have buying with a 20% deposit?
No, not many. Not the first property, maybe the second, third, and fourth, but the first one's 90%.
Yeah,
but not many property markets, good areas haven't gone up 10% in the last 12 months. Like, there's none are going backwards. Not good ones anyway.
So we were talking off air that your strategy is you've had to pivot because of the sheer demand, right? Like, we're seeing listings uptick, but they're being absorbed so fast that it doesn't feel like there's an increase in listings. They just come and they go, right? So rather than competing with the 7,000 people that are maybe looking at a particular property, you're leveraging agent relationships and building agent relationships to try and find the ones on the margin. What can you tell us about that?
Yeah, well, if you're going on real estate and domain, you're going up against everyone else. And I'm talking, there's 60 or 70 people going to, if there's a good property in a good location, say in Adelaide or Brisbane, there's still 50 or 60 people looking at it. Like, it's crazy. So if you're going up against all those people, usually people will sell a property that's in, pretty good nick, because they're going to get obviously more money for it. So we're using our relationships, trying to get things off market that have either a tenant in there that's, like, there's multiple I've bought in the last couple of weeks that let's just call them hoarders. There's a lot of stuff in there. So to get that person out, to clean it up, it's a nightmare. The carpet's stained, and they smoke cigarettes, so the walls are gone yellow. It's a good house, solid bones, a nice big block of land, big brick house in a good location. With 20 or 30 grand, you make 100 grand on this thing. But for them to sell it, you're not going to have people walking around and go, oh yeah, this is a nice house. I really want to live here.
I love what they've done with the place.
Because some people can't see past what's there and what could be there. And we've had a lot of rent backs lately. So the owner wants to rent back for 3 to 6 months. A lot of them because they're getting developments done, like they're building a house to move to, and they don't know when it's going to be finished. So an owner occupier is not going to want to buy that because they want to live there. They're not going to wait 3 to 6 months to rent it back at a lower rent to get the property. So there's a lot of that going on. Just different ways to get property with relationships with agents.
And circling back to the renovator, when you're sort of looking at something, I know it is hard to get, but is there something that you walk into or you see and you're like, yeah, this is an absolute cracker. I can spend 20, 30 and make 100.
Yeah, all the time. One I bought the other day for a client. It was, it was not nice. Like mold everywhere, holes in walls, stuff everywhere, tires in the, like, this is in a very, very good location, like beautiful suburb. And this house wasn't a crackdown because I went crackheads, but it looked like it. It could have been. We got that for so cheap. It's going to cost a bit to renovate, but that'll be almost double what they've made on it. But you couldn't sell it. Like, people just walking there and like, what the hell is going on here? It was gross.
Yeah. Yeah. So, like, I mean, that sort of seems you've taken that sort of fixer-upper strategy to the next level. You're not looking at something that's out of date or just a little bit tired. You're actually looking at something that is kind of like ruined and potentially unsaleable, but is fixable.
It depends on the client. So obviously a lot of clients don't want anything to do with that. Even though we take care of it, they just don't want anything to do with it. A lot of people don't have the cash. Some people might only have 15 grand, so you can only do the paint and the carpets or something. So I'd say a majority of clients, it's just a freshen up, but some clients out there just want to go all in and get right into it.
And is that where you're seeing the most value, or you're able to create the most value?
Definitely.
Yeah. Awesome.
But the fixer upper though is still good. Like if something's tired and ugly, people still think it's tired and ugly. Like they can't see past that. Even if you can literally paint a house and it makes a difference. It's crazy, but people can't see that.
I've been asking people to see past my tired and ugly self for years, but it's still a battle. So I get it. It's tough out there. I want to ask you about self-managed super funds. Now, this is not something that you've necessarily gone out and chased or, buy with me with your self-managed super fund, but you've found in your own kind of seat of the pants feel and data that there's a huge influx of self-managed super fund investors coming through your doors. What are you putting that down to? The Geared for Growth Property Investing podcast is presented by our business, MCG Quantity Surveyors. If you're an investor or a property professional looking to get the best tax depreciation deductions for yourself or your clients, please get in touch with us at mcgqs.com.au. It's our mission to help as many property investors as we can to maximise their claims and maximise their property education as well.
Mate, in the last 5 or 6 years, I reckon my business was 5 or 10% super funds. Now, at the moment, it's probably 70%, which is a big difference in a 12-month period.
Yeah.
A lot of people obviously tapping out earlier because rates are higher, cost of living is higher, everything is more expensive, so they can't borrow as much money. And Australians love property. A lot of people don't realise that they can actually buy property in their self-managed super funds. So let's say we have a conversation and they're like, okay, I can't borrow money now. This is, maybe in 5 years. And I'm like, okay, how much have you got your super? If they've got a couple $100,000 in their super fund, they can buy property. So that gets people into the property market. And the same fundamentals apply with super fund or not super fund. You're still getting into property. So it seems to be, until rates come down and people can borrow more money in their personal names, seems like self-managed super funds property is the go.
That'd be an interesting thing to check in with you. I mean, if we get rates back down to 3 or 4% or thereabouts in terms of being able to borrow, will that drop off? So you're actually really thinking it's an individual like you or me that maybe has a couple of properties, but the bank's sort of saying, yeah, it was worth a shot, but it's not happening, not at this interest rate, not with your serviceability. And they're seeing this super fund as this brand new golden entity. It was like, oh, well, the door's not shut over there. Like I can actually go and pull the trigger because I believe in the fundamentals of property. Is that sort of where they're at, you think?
A lot of lenders have actually come back into the space too. So it was pretty hard to actually borrow in your super fund. There's only probably 1 or 2 banks that would do it for the last, probably 5 years. Now it seems like a lot more are coming back into it because banks want to lend money.
Yeah.
So if people can't borrow money, what otherwise can they do it? Okay, self-managed super funds.
Yes.
And obviously it has to go through a financial planner. It's like a 6 to 8 week process. It's not, it's not easy. It's a bit of a pain in the ass. There's a lot of paperwork involved. But more banks are doing it. And I think more people are realizing that they can actually do that.
Well, we did an episode on this show about the pros and cons of investing with your super fund and how you need to have a statement of advice and get that set up with a financial planner. So if this was a sophisticated show, I'd say go to episode 473 or whatever. I have no idea what it is, but you can certainly find it. Now, not just super funds are you doing some work with, but there's actually some ways that you can make some improvements to a property within a super fund. Now, there's all sorts of rules, and I don't pretend to be an expert in that, but you're actually saying that you can do light renovations, not huge structural modifications, but repairs and maintenance style renos where you can manufacture some equity in super?
Yeah, well, you can't do development. You can't pull down load-bearing walls. You can't reconfigure things, but you can update the property. Like they can't expect you to have a property from 1930 and be the same forever. So you can update the property, the carpet. You can update the kitchens and the bathrooms.
Yep.
So you can do a cosmetic renovation if the property needs it. All the money of it, everything for a super property, absolutely everything has to come out of the super fund. You cannot put $1 of your own money into it.
Yep.
So you can renovate for maintenance. So yes, I've done multiple renovations in super funds in the last month, to be honest.
Yeah, right. And with super funds, I mean, when people first started investing in super funds, the properties always kind of seemed to tick a few certain boxes. They tended to be newer properties, low maintenance, low ongoing expenses, potentially commercial. What is it? Would you say that there is a super fund sort of class of investment, or is it basically just open slather for what you might invest in personally?
You seem to see a lot of people buying the house and land packages in super.
Yeah.
I'm not sure if that's because the lending's easier. I've never personally done that, but that seems to be what people do. Obviously, commercial, you get higher rents. You need bigger deposits for commercial. And obviously, if someone's got a heap of money in the self-managed super fund, they can give a bigger deposit, like 30 or 40%. If it's sitting in your super fund, why not? But I do the fundamentals in our property. It's just existing property in good locations, what you can afford. Doesn't matter if it's in super fund or not.
Now, talk to us about good locations. Now, you sort of previously said, well, basically Australia is a good location at the moment. I mean, we're always taught that there's markets within markets and you can never talk about the market, but it does sort of seem like fairly broadly across the country, things are doing well. Obvious examples where they're not is Victoria, Canberra's struggling to some extent, Hobart, but the rest of the states are humming along. Where does your head go to in terms of the areas that have the fundamentals that you think are going to have the best drivers?
Well, Canberra and Hobart had an absolutely massive run for a pretty long period, so you can't expect it to keep going forever. I'm sure they'll come back around. There's a lot of money in Canberra, considering the size of it.
Yeah.
Just their land tax is ridiculous. But saying that, the best location is where you can afford. So if you can afford $300,000 or you've got $5 million, it's a pretty different conversation, a pretty different location. Just because you haven't got $1 million doesn't mean you shouldn't invest in property. There's good locations all around Australia. It's just finding the right one. South Australia, Queensland. I mean, a lot of people are buying Perth at the moment. I think that's probably about to catch fire, like literally. It's crazy. But depends on what the person can afford. It depends on the different location.
Yep. And, you're probably going to regret saying this, but I heard you say 300. Now, there would be people out there kind of thinking, like hard to find, but I'm sure that you could pull up realestate.com and run a search and find stuff relatively easy. But there would be people sort of saying, look, there is probably a minimum value that an investor should spend. What would you say to someone that's saying, look, if you haven't got 500 or 600 minimum, save up until you do, because the 300 odd ones are just going to be trashy things that won't perform to the same level?
No, that's ridiculous. I've bought multiple properties this year in the 300,000s that have done very well already made 10, 15%. Like obviously 300 is a tough budget. That one I was talking about before with the renovation with all the holes in the wall, we bought that for $250,000.
Right.
After a $40,000 reno, that's a $450,000 property.
Yeah, well, you said it was a good area, right?
It's a very good area. So there's good areas in Australia that aren't that expensive. Like you got like your Rockhamptons, your Bundabergs, your Townsvilles. They're absolutely pumping at the moment, and they're between the $300,000 and $550,000 mark. There's all infrastructure there. There's population growth. It's got everything there. So you don't have to be, obviously not Melbourne at the moment, buy in Sydney to get capital growth. It's absolute bullshit.
Yeah, which again is probably a technical term. I'm going to have to tick that box. This episode's maybe not safe for children, but thankfully I don't think I have that many children listening to this anyway. So you mentioned before that, you don't really watch the news and, I don't know, are people saying that it's unaffordable? I think in the lead up to the next federal election, housing will become another battleground. We've already had an early salvo with people talking about negative gearing. We've had, a lot of intervention from the Greens in trying to exert their will on the Labor Party with things like rent caps and those sorts of things. What do you kind of see as happening for Australia in the next couple of years from a housing point of view?
I didn't say anything was unaffordable. I think I said that the market's about to shit itself. But the funny thing is, you see people posting all the time, newspaper clippings from the 50s, 60s, 70s, 80s, 90s, and it's always on the newspaper. Housing unaffordable when houses were 20 grand. Now it's literally always been the same. Property is expensive to get into, yes. But people still waste their money on rubbish. If you sacrifice or get a second job, like now, you can side hustle. You can have online businesses. You can get to people all around the world in 1 second. You couldn't do that before. So now it's probably easier to buy property. Yes, it's more expensive. Yes, you need more money, but you have more ways to actually make money to get into property.
But I just got the iPhone 15 and they're saying that the new AI assistant isn't going to be supported. So I have to go out and get the new 16 plus or something, Oliver. I mean, like, I don't want to be left behind. I don't want people to tease me and go, oh, here comes Mortlock with his iPhone 15, which is last year's one. I mean, how do people... Yeah, how do people... I shudder to think how much it costs. How do people kind of resist that? I mean, obviously, you've been doing this for a fair while and, you've sacrificed a fair bit to get to the point where you don't necessarily have to do that, but here and there you choose to do that because you haven't finished, right? You're still grafting. But what advice do you have for people that are just kind of stuck in that, spend less than you earn and invest the difference mindset, which is as kind of simple as it needs to be?
Stop trying to keep up with the Kardashians. I still wear the clothes I'm wearing. I mean, I bought 5 years ago. I didn't give a shit about any of that stuff. I've got some nice things. I like nice stuff. I have a nice car. I like to go out and enjoy nice things. But if it's at the sacrifice of me whinging because everything's too expensive, I can't get into property, but then I go out and have the old avocado on toast trick. What do you expect? I worked 6 days a week, 15 hours a day in construction and didn't spend any money to start the process. It was horrible, but got me to where I am, where I can do what I want when I want. So if people just want to sit there and whinge and go, oh, property's too expensive, I'm never going to get in. It was easier for them. It's easier for that person. Mate, everyone got there the same way. They all worked their ass off and saved to get there.
Yes. I look forward to the hate mail in the comments on YouTube for that one. But I mean, I guess it's difficult. It's difficult. There are certain people that, perhaps don't have the capacity or the physical ability to work like that, like you did. But, for every one of those, that it seems like there might be 10 people that kind of do have the capacity, but just aren't willing to graft and make that sacrifice. But is that just something that middle-aged white men are saying right now?
Well, yeah, okay, it was a laboursome job, but you could sit at home on your computer and buy and sell things from Marketplace and make money. Like when you're not at work, how about you don't watch Netflix or don't watch the news and flip stuff? Like there's things you can do, drop shipping. There's so many things. It's crazy. People would rather sit there and type things on the thing saying, oh, this is too hard, everything's too expensive. Use that energy to make money to then not have to whinge about it.
Good. Well, I think on that note, it's probably a good time to finish up. Oliver, thanks for the insights. And yeah, I'm looking forward to getting you back in the future, especially when rates drop and see what's happening with the SMSF. And yeah, always good to check in with you to see what's your take on the pulse of the market. So thanks for joining me.
No worries. And any angry comments, just send them straight to Mike.
No, thank you. I've got your address. Cheers. We'll share Oliver's personal mobile number and home address in the show notes. Thanks for listening. We'll see you next time.
Thanks, Mike.